Welcome. I'm so excited to be here today. And I'm a little nervous because that food at lunch was quite delicious. And I'm seeing these comfy couches, so I'm hoping nobody goes into a food coma during our fireside chat. Any case, thrilled to be here with you all today. And I'm particularly excited because it's not always that I get a chance to talk about two topics at the same time that have been close to my heart and a deep part of my life, and that's payments and nonprofits. I've been in the payments industry for nearly 25 years, as Sal said, at first at American Express in a variety of roles, and now at Stripe as head of customer success for our platform segment. But I've also been involved with nonprofit board leadership for nearly just as long, from charter schools in the Bronx and Newark, New Jersey, to my current role as the chair of the development committee for the board of Montclair Film, which is an arts-focused nonprofit. So I intimately understand the struggles of fundraising in a broader environment, where individuals are demanding frictionless experiences, and more importantly, how this has become even more critical for effective fundraising for today's nonprofit organizations. The board I currently serve on is about to kick off a $1 million capital campaign, so this topic is incredibly top of mind for me. Now, Fundraise Up and Stripe partner really closely to create a new standard of online giving. We commissioned IDC to take a closer look at the nonprofit industry, how it correlates to consumer experiences and expectations, how generational changes and preferences are influencing the shape of donor giving going forward. And for those of you who might not be familiar with IDC, it's a global market intelligence and data provider for the IT, telecom, and consumer technology markets, This IDC spotlight that we put together led with the finding that nonprofits should treat donors like customers. This may seem obvious, but a lot of nonprofits have yet to truly adopt this approach and embrace it. I'm reminded of something I heard Sal say earlier this year at another conference, and that was, expectations are set by the consumer experience. And that couldn't be more true. In today's consumer environment, there's an expectation of speed, of convenience, of personalization, and seamless omnichannel integration across digital and physical touchpoints. And now you throw AI into the mix, the buzzword, and we'll continue to see evolution in consumer experiences, including their payments experiences. We have a generation of people who have grown up on wallets, mobile devices, and one-click checkouts. And they have expectations that these experiences are the same across all of their interactions of their lives, whether that's buying a coffee, ordering something online, and even donating money. People want to pay how they want to pay, whether that means in their local currency, with their Google Pay or Apple Pay on their phone, or with their debit or credit card. The minute they cannot do that, you risk losing them. I was talking to a colleague the other day at work, and she was sharing her experience of recently donating to an organization and finding it to be an exceptionally smooth process because the website was using a one-click checkout feature that had been integrated into their payments flow. That meant she didn't have to think about entering her payment details or her shipping information or her billing information because they had already been saved as part of the one-click feature. The ease of this payment experience stuck in her mind, and she mentioned how she was much more inclined to give again to this nonprofit because of it. On a more personal note, as I mentioned, the donor experience has been on my mind a lot because we're about to kick off this very big capital campaign for Montclair Film. So even though I work in payments, and I've been in payments for a long time, I think there's still a lot of opportunity for us to improve our own donor experience at Montclair Film. For example, we host every year an annual film festival. It's our signature event that attracts tens of thousands of attendees who tend to be at the peak of their engagement with us during that festival. And I've been thinking about how cool would it be if our development staff could harness that positivity and energy in the moment with something like giving tables outside of film screenings and enable them to take in-person payments. In the industry, we call this with their phones. We call it kind of tap to pay, allow you to use your phone as effectively a payment vehicle. It's not exactly the same, but think about when you go to an Apple store and the staff have these mobile devices which allow you to pay, no longer queue at the register, but you just can pay with these individuals. So kind of bringing that experience into giving. Now, I don't know whether Montclair Film would ever adopt this or do anything like this, but I think the takeaway is that how can we in the nonprofit world think more broadly about our customer giving experience so that it replicates other experiences these people are having, or people are having in their world? So again, I'm super happy to be here. Thrilled to dig more into this with Sal, and thanks for your time. All right, Sal.
All right.
Let's get into it.
Thank you, Jan. Have a seat right here.
All right.
All right, we're gonna dive into this IDC Spotlight paper. I'm gonna ask you a few questions.
Sure.
And we've got some data, which I think some charts and some spreadsheets might be nice for us to take a look at. Let's talk about the donor as a customer. You've got a lot of experience, Stripe, American Express, obviously customer-centric, customer-heavy. If you could share one or two things that a nonprofit can embrace from that world into their work, what would they be? How can they excel at customer success? What does that look like for a nonprofit from your purview?
Yeah. The heart of customer success is deeply, deeply understanding your customer, their priorities, their needs, their wants. It's understanding their pain points. And that's first and foremost. You need to start with the customer. At Stripe, we have a saying, users first. We call our customers users. But when you do that, you understand how to keep your customers. Retention is earned. Customer retention is earned. And you earn it by delivering value. That could be in the form of kind of outcomes for them, or it could be just because you understand the friction and you remove bad experiences. The minute a customer has a bad experience, you lose them. Now, as I think about translating that into the nonprofit world, it's a bit what I just said. How do you expand that definition of customer to include your donors? Nonprofits want the same thing. You need to drive loyalty, engagement. You need to retain your donors, right? Clearly, you want to acquire new ones, but it's a lot easier to keep somebody giving, just like it is in the commerce world. Keep somebody as a customer rather than acquiring them. And the way you do that is by understanding their experiences, their pain points. It could mean that you navigate your own website. What does it feel like from their perspective? In the tech industry, we often call it dog fooding, which means you experience your own product. This allows you to experience it from your customer's point of view. And then once you do that, you start to understand what their pain points are. Does it meet your expectations? And so I think customer success in nonprofits or in a for-profit world pretty much want the same thing. How am I delivering value? How am I communicating that value? And how am I keeping that customer?
Spot on. It reminds me of two things. And by the way, I don't know her answers, and this is kind of unscripted. I looked at the Moore Group does a report every year, the Moore Group agency. We participated in it this year, and they had data that clearly showed retaining obviously is way less expensive for an organization and growing your donors than acquiring new ones. So take care of them, right? This is some data from the IDC, and this was a survey. There were over 1,200 respondents to this, and the question asked to this group, and separated by age cohorts, was how likely would you be to choose to shop or dine elsewhere if you experienced limited payment options? Now, I know this is a dead horse that has been beat now for a couple of years, but it's very important, right? And I think we all have this notion that it's younger donors, right? But here we see nearly a third of respondents, nearly a quarter are 65 and older. And that means that they too are sensitive now, and increasingly so as we go forward. It's not going to go backwards, right?
It won't.
So this is something that I think all of us need to keep in mind when we look at that. So let's talk on the next point just for a little bit about overcoming friction in giving. I think you touched on it in your opening notes there, absolutely. And the paper highlights that really friction in the donation process is the #1 killer of revenue and giving. Friction. And we've talked about it this morning. We talked about address autocomplete. We talked about wallets. We've talked about the experience end-to-end and so on. Where have you seen proof of this outside of the nonprofit context where friction is being detrimental to the outcomes?
You see it all the time, particularly in online e-commerce environments. You think about, there's a statistic out there, about 70% of carts are abandoned, which means people leave the purchasing path online. So if 70% of all carts are abandoned, it's really important to get your checkout kind of optimized. And it's one of the things why we actually focus on this at Stripe. We actually have a product that's a pre-built checkout for pre-built checkout experiences. We've seen case studies with companies like Warby Parker, the online glasses, Turo, who do online rental of cars, and even Slack, who had issues with their checkouts and come to kind of us to try to understand, like, how do I fix this? And there are a couple of things that really kind of bubble up to the surface in terms of common friction points. There is how many steps does your checkout process take? It should be under 5. And if it's over 5, you need to tell me or tell a buyer where they are in that flow. Are you auto-filling things like address details? Are you allowing a customer to save those details? Are you offering them all the wallets they could possibly have for faster checkouts? Are you, for anybody who's global, are you allowing them to select their country and their preferred currency? And then I am in the payments industry, so I have to remit if I didn't say anything about payments, but payments flexibility, super, super important. I said at the beginning, Sal, there's a 70% cart abandonment on average online. When you look at not offering someone's preferred payment method, that abandonment stat jumps to 85%, and they leave. They leave, and you've lost that opportunity to convert them. And we see this, as I said, it's not just nonprofits, it's e-commerce, and a number of e-commerce companies. You're constantly having to kind of optimize this. And so those are some of the kind of real common friction points we've seen with other companies. And once you start addressing them, you start to see conversion going up. Payment flexibility is probably one of the key levers to pull to drive conversion.
Reiterate, the consumer is a donor. Yep. Same person, same expectations, right? Let's keep that forefront of our discussion always in our mind. Yana, I've literally got into my car, have gone to stores on the assumption that they're going to take Apple Pay. Yeah. And I will get back in my car and leave if they don't. Now, if you think that a donor is not going to do something similar, visiting your website for something that they're not going to get anything in return for except good vibes and the feeling of impact they're going to have, think again, right? And the numbers show that over and over.
I had another interesting stat too. It's not just about offering what they want. You actually see a revenue uplift. We have a stat, and we often talk about in Stripe, that for folks who seem to be focused on cards, whether it's debit or credit, you actually see a 12% revenue uplift when you offer something in addition to card. So that's revenue that you're just incremental revenue that you're capturing.
It's gone. It's gone. I want to talk a little bit about recurring payments, subscription economy, what we call monthly giving or regular giving in the UK. When I looked at some data recently, I saw how much more resilient recurring giving is over one-time giving. Now, I pulled some data here that I want to share with the audience, and we have it here in front of us as well, so I don't have to keep craning my neck back. That's crazy. So here is 2025 year-to-date data from Fundraise up. So this is first party. So the average gift there may not match what you have, but this is indicative of the average gift from January through until about the end of September, and how much the average gift. Now, this is blended across thousands of organizations. This isn't a one-off. This isn't a limited data set. But look how much the average gift will flow between somewhere around $55 and $250, okay? That to me tells me that one-time giving is highly volatile, sensitive to milestone moments that I call markets, tariffs, shutdowns, et cetera, right? Now, this is not the correct label on this slide, but this is the monthly giving average. Look how much more resilient that is. It's slow and steady. It stays right there, and it's consistent. And again, if you want to mark up that this is monthly on your photos of that, this is monthly giving. So it stays right between that $33 and $38 kind of line. Again, this is statistically significant data from thousands of nonprofits. So this suggests, and the paper suggests, that recurring revenue can stabilize cash flow, impact, delivery of the mission, and so on for nonprofits. So in your view, what is the single most important, either technical or strategic, change that a nonprofit can make in converting a one-time donor to a monthly donor and getting a longer relationship with them?
So I'm going to cheat. I'm going to give you two. Okay. I normally think in threes, but I'll give you two.
Okay.
The first is making it easy to become a kind of recurring donor. Is it clear when I'm on your website that that the options being presented to me? Is it clear the value I get from being a recurring donor? Is it how are you kind of surfacing that information? So making it easy, point number one. Two is treat like a membership mindset. Mm-hmm. Recurring revenue is often associated with subscription businesses, SaaS platforms, things like that. When you adopt a membership mindset, it's not about kind of, again, something we talked about a little bit earlier, right? On the hunt for new customers. A membership mindset requires you to understand how you're fostering engagement. That involves transparent communication. How are you communicating the value you're delivering? Are the outcomes that you're realizing? On a personal note, I can think of, I'll talk about it from two perspectives. One is somebody who's given a lot in my career, or my life, I should say. I was sponsoring a child as part of this organization that was based in Africa. And every month they would give me letters about how the child was doing. And I'm like, wow, I know how my money is being spent. I feel really good about it. And so when it came around to re-up for a new child, I did that. Or I see something on the other side from my Montclair film experience. One of the things we do is with our donors, we like, here are all the educational programs we're sponsoring. It's giving us a reason to reach out, to remind them of like, here's how your dollars are being used. And so it's treating them like members, right? We have this ongoing relationship. So it feels like common sense, but I think we need to really leverage that. That's what, the way you keep somebody wanting to keep them paying is reinforcing that value, treating them, being transparent with the communication.
I was going to say transparency and demonstrating the impact and being fully upfront with what's happening there.
Yes.
And to the first point, community, creating a sense of community for your donors. I know we have Dana, I don't know if she's still here, Dana was here, but she wrote the Monthly Giving Mastermind book, and she has a whole book about you have to create a community and name the program and make them feel like they're part of something.
Exactly.
So that's important. Was that your two? We covered the two?
Yes, we covered the two.
Okay.
I will not slip in the third.
All right. Now, this is additional data that I'd like to share regarding the nonprofit industry and baseline. So what this is data from Giving Tuesday Data Commons. And we had an event a couple weeks ago. We had Woodrow Rosenbaum, the Chief Data Officer of Giving Tuesday here, and he was sharing that in the nonprofit industry, 2% of all new transactions are monthly, new monthly gifts. And the takeaway was, if we could increase this by 5 basis points, we would have an additional $10 billion in the sector for the causes and missions. Now, the other data point that I'm sharing here, again, we have first-party data at Fundraise Up to see what percentage of first transactions on Fundraise Up are monthly gifts, and that's at 6.7%. So we've essentially, right, in a beautiful world, every organization was using a platform that was as effective as Fundraise Up at converting donors to monthly donors. And we could close that gap and add the 10 billion, and then added with the strategic part and the community part and all of that, we can add that 5 basis points as a sector instead of sitting at the 2% point there, which I thought was incredible data and something really to aim for. Before we go to that slide, I'll leave this up for a minute. Let's talk about the partnership that we have with Stripe for a minute. It combines Fundraise Up technology with a layer for nonprofits with Stripe's advanced technology in the e-commerce space. It creates a very effective advanced fundraising platform for nonprofits in that combination. From a success and satisfaction point of view, how do you see this collaboration addressing the challenges that nonprofits face? Are we all wasting our time here? Are we getting things done? And how do we help them achieve their goals and their revenue outcomes?
Yeah. We're definitely getting things done, Sal.
Good.
And I think there are three, as I think about it, again, I think in threes, there are 3 things I want to mention. One is the way we work together is how do we make sure that transactions that should be completed are completed, that you're not leaving any money on the table. And that's about optimizing the payments flow. And so there are a couple of ways we do that, but one of the ways is that to make sure that you're passing the data that you should be so that it's confirmed as a legitimate transaction and it goes through. The one thing you do not want to have is a transaction declined. Again, if that transaction is declined, the person will walk away. What's the point? So we want to make sure that that payment flow is optimized and that all the transactions are going through that should be going through. The second way we're partnering is how are we making sure we're leveraging some of these new or have more seamless ways of paying. So you heard me mention one-click in my opening remarks with that story of my colleague who had experienced a one-click feature, which is perfectly pre-populates all of the information. We're partnering to really to launch that and to test that out. What that does is not only kind of drive higher conversion, like the chance that the transaction is going to happen, it also creates those seamless experiences we talked about. It's mirroring something that's already happening in a donor's outside life, beyond donning, beyond giving. And the last point I would make is how we're exploring kind of adding additional local payment methods. These are kind of, as you think about being a global or serving global companies, organizations, and having global donors, you're going to want to be able to have them pay in the currency they want to be able to pay in. So if I have a donor in the Netherlands and I do not have Ideal, which is the most popular payment method in the Netherlands, I am likely going to lose that customer because you're not offering it to me. What it tells me also is that you don't understand me and you don't really want my money because you don't have the payment method that I want. So those are three ways that we're really partnering together to make sure that your customers can take advantage of it.
Stripe and Fundraise both offer Ideal.
Yeah.
So,
there we go.
So we don't get dubbed. And these are, advanced technologies, massive amounts of code and innovation behind them, while bandwidth and resources and mindset might be obstacles in organizations. What I think is beautiful about this is it's top grade technology, but budget and cash outlay is not an obstacle. Yes. These are platforms that are, they just need buy-in and mindset shifting to adopt them and reap those benefits. Let's talk a little bit about the future of digital giving. Looking at the trends of younger digitally native donors, with the emerging payment landscape that's happening, what emerging payment technologies or consumer behaviors have you seen or do you believe will have the biggest impact on this space in the next, let's say, 3 to 5 years?
Yeah. So Gen Z and younger, but Gen Z is a really important segment. They are predicted to be the largest segment in history and the wealthiest segment in history. And as a mom of 2 Gen Z folks, I know this generation pretty intimately. There are a couple of things. This is the first generation that has grown up entirely digital, as you mentioned. And so they are a generation that wants immediacy, that wants, again, kind of frictionless experiences, and so nonprofits need to meet those expectations. The one trend that you've probably heard a lot about is AI and agentic commerce. I think that is going to be a big game changer. As we think about the influence of kind of consumer commerce experiences into the nonprofit world, what you're seeing with agentic commerce is that now within a flow of ChatGPT enabling commerce experiences, payments is even being made more immediate. Right. So the question is, well, how do I then capitalize on it? But it's not just AI in commerce. It's also how are you leveraging AI to transform your operations, to make yourself more efficient? I think that's probably the single most important trend or innovation that I see, and it's happening a lot faster than it has in the past.
Right, and yesterday we had Calvin Abbasi from OpenAI here, and that's 2 speakers that have never met each other saying something similar. So this is further confirmation for us that this is something that's happening and it's real. This is some data from the IDC paper here, and while our first data point was, if you don't have my payment method, I'm leaving, this one is showing by age group what they're regularly using. And we see here that about 1/3 of respondents that are 60 years and older indicated that they use digital wallets regularly. So what we have happening is that our audiences and society as a whole are adapting and evolving faster than the nonprofit sector in delivering those experiences and channels to them. E-commerce, ahead of the game, pushing it forward at full speed, and that's where we want to work to catch up. So I want to talk about a few key takeaways here as we wrap up our discussion. If you have some questions, think about what they might be. We'll have a few minutes for some questions. So the key takeaways here are, this isn't about younger donors need Apple Pay, right? We've all heard that. This is all demographics are adopting higher, elevated customer experiences, transaction experiences, donor, whatever you want to call them, at a rate that's faster than they're aging into the new groups, right? So we've got these groups and they age through, but it's happening faster. One thing I want to suggest, and you mentioned this, what did you say? Eat your own dog food?
Yeah,
Was that the one?
Oh, dog fooding. Yeah, dog fooding.
Dog fooding. It's a verb. I didn't know that. Experience your org as a donor. I do sessions around quite often, and I'll do surveys of the room, and I'll often see 50 to 70% of the rooms, when I ask them, have you ever tried to make a donation on your own org? They'll say, no, right? And that's wild. That means we have no idea what we're asking, the hoops that we're asking them to go through. And if you're doing it and you find it to be annoying, there is your revenue gap right there. So the objective here for all of us today is to draw our own conclusions from this. This isn't, hey, here's what you need to do. This is, here's what the world and the sector is telling us that we need to do. And this data, I mean, this stat here before was 1,200, I think 1,200 respondents. These are people that are you. This is the audience. It's people just like you, that you use your different payment methods to make these transactions. These aren't some mystical group of unicorns that are doing something different. This is you. And obviously the workforce includes 10% of that is made up of nonprofit workers. So the takeaway for me for this audience is, you're part of the changing face of philanthropy. Does your organization mirror that face? Is your organization meeting that? Does the sector? The data that we have and that you've shared in these experiences tells us that we have to, and it's as existential for the sector, in my opinion, in many ways. Any other thoughts you have, or should we open up for some questions?
We can open up for questions.
Okay. Does anybody have any questions on any of these points that we shared here today around the experience, payment method, age, demographics? Anything here? If not, we can. Samantha.
The graph that you had on about payment methods and the ones that people are choosing, the smallest one, is there any background to how that's growing? Because I always feel like e-transfers, that type of thing, it's not really, I don't really see that a lot in not-for-profits in Canada anyway. I just wondered if that's a growing, like what speed is the smallest chunk growing?
I don't know if you have notes on that. I know there's a website it's called the International Payments something landscape. I know the website, I don't have the name in my head, but they project that over the next 5-10 years that is in a constant decline as far as the bank-to-bank payment methods. There's still enough going through it to merit offering it in some cases, not all, but it is overall declining.
They're small, as I think about that ACH check, it's small not because it's new, it's small because it's legacy and declining. To your point, Sal.
Right. And I know in our data, we'll typically see larger transactions will be through that method. Yeah. I know in the UK, regular giving is highly dependent on direct debit, which is also a declining payment method for subscription giving, as the industry still needs to catch up. Any other questions?
I have a question.
Yes.
So do you have any advice for smaller nonprofits that are trying to get their leadership on board to jump into, try using some of these payment methods?
Oh, yeah. I think it goes back to almost like my customer success mindset is linking it to the outcome. So what is the uplift you will see by converting to these? We have statistics around that. When you add wallets, there's a case study actually that we've done with a couple of our customers who've moved who've added wallets, and they've seen 8% conversion uplift by doing that. So we do a lot of these case studies with companies like organizations like Fundraise Up. So I'd always want to link and label that. So I don't know if you want to add to that as well.
I mean, I'll just add that you might want to do a little survey to your board and ask them what payment methods they use often, right? Kind of just hold up a bit of a reflection and ask, what are your preferred ways of transacting in your normal day-to-day, and then use that as leverage in the conversation. Any other questions? Shane.
Good afternoon, and question for you with regards to the credit cards, and especially with the opportunity for fees to be covered. Are you seeing that, a lot of people are using the credit card for additional benefits for themselves? Are those credit cards also still choosing to cover the fee? Are you able to segment that data or no?
Fee coverage on donations. Credit card is highly preferred, and all of your other payment methods are typically piggybacking off of credit card, Apple Pay, Google Pay, and so on. So it's obviously the widely used payment methods. As far as covering the costs of transactions, I think we trend somewhere between 85 and 95%, depending on cause, gift amount, and so on, of donors covering the transactions. Now, I talk about this quite often. If you're delivering a poor experience, don't expect that to perform well. Right? If you're spoiling them with, as Neen said earlier, a luxury level experience, are you auto-completing the address? Are you giving them zero typing for their donation? Are you delighting them the whole way through? Expect that number to soar, right? But when you have a donation form that looks like it's 15 years old and it looks like it's a DMV license renewal, and then you ask them to cover the transaction costs at the bottom, that's kind of like getting bad service at a restaurant and asking for a tip. Right, so that's the kind of mindset I think that would be used there. Jonathan.
Where do we see crypto, virtual, abysmal, whatever you want to call it? Obviously, it's coming. It's coming fast for insurers in specific areas. But as the young generation started to embrace it and be exposed to it, where do you see us projected out in your commercial e-commerce first, and then eventually on the outbound side?
Yeah.
So cryptocurrencies, where do we see that going?
Yeah. We just had a big customer conference last Tuesday, and stablecoin crypto was one of our, in addition to AI, were two of the focus areas. I think it's coming, to your point, it's going to happen in kind of e-commerce consumer spaces before it comes here. It needs to be more wide. First of all, we need the rails really kind of built to accept and to pay out. And I think it's those other consumer experiences that are going to drive fast adoption. I happen to be at a company who's at the forefront of doing that. So we have companies like Shopify who are allowing people to their own kind of businesses to pay in crypto. So I think it's a great point. I actually didn't call it out as one of the things that are happening in the next 3 to 5 years. I think it's a slightly longer time frame, but it's happening quickly. But we need to have it more widely accepted. As I think about those countries where crypto and stablecoin are really useful, is those countries that have pretty unstable currencies, or so allowing you to donate in stablecoin is really powerful.
Sorry, just to follow up, do you anticipate Stripe being able to support stable?
Oh yes, well, we already do today. We have across all aspects of the value chain.
Yeah. Yeah, and giving with crypto and that, I think we see that it's, like you said, crypto is used in more and more kind of limited and specific cases, or larger stablecoin is large transactions. It's in territories and regions that might have unstable banking networks and so on. So while it is very buzzworthy, it hasn't taken the hold on individual giving as a one-off kind of transaction as we thought. Yana, thank you so much for joining us here today. I appreciate it.
Thank you for having me.